Good day, everyone. My name is Nicholas Douse, and today I will be presenting my investment analysis based on my stack track simulation project. Throughout the project, I actively traded across multiple sectors, including technology, banking, telecommunication, consumer goods, retail, and energy. I also diversified my portfolio using EFT and cryptocurrency to improve risk management across asset classes. Initially, my strategy reflected my natural preference as a risk averse investor, but as geopolitical tension increases due to the conflict involving Iran, market volatility increases significantly. As a result, I adjusted my strategy towards more short term tactical trading opportunities, particularly within sectors that were responding strongly to global economic conditions. During the simulation, I traded weekly and built a diversified portfolio that include companies such as Amazon, Google, Apple, JP Morgan, Wells Fargo, Exxon, Valero, AT&T, Verizon, Walmart, Costco, and more. My investment decisions were guided by sector performance trends, macroeconomic news, oil price forecasts, geopolitical developments, and technical charts observation. At the beginning of the simulation, I focused mainly on stable large cap companies. However, as tension in the Middle East increased and oil price began rising, I shifted towards short-term trading strategy, especially in the energy sector. This shift allowed me to adapt to market conditions and respond more effectively to sector-specific opportunities. Most of my profit came from investment in the energy sector, including Exxon, Valero, Marathon Petroleum, and Phillips 66. These gains were largely influenced by rising oil prices during the geopolitical conflict involving Iran. The increase in oil prices created strong short-term momentum in energy stocks, which I was able to take advantage of through timely entry and exit decisions. I also generated profits from technological companies such as Nvidia and Google, as well as financial institutions like JP Morgan. From these successful trades, I learned that monitoring global economic events and identifying sector rotation patterns can significantly improve short term investment performance. It also showed me the importance of combining technical analysis with macroeconomic awareness when making investment decisions. Although I achieved gain in several sectors, I also experienced losses, particularly in the telecommunications stocks such as Verizon and AT&T, as well as consumer stocks like Pepsi and Walmart. These sectors showed slower price movements compared with the stronger performance of energy and technology stocks during the simulation period. Another factor contributing to the losses was exiting some positions earlier than necessary due to uncertainty surrounding geopolitical risk and market volatility. This experience taught me the importance of patience, disciplined strategy execution, and confirming technical signal before exiting position. It also highlighted the importance of allocating capital towards sector with stronger momentum during uncertainty economic conditions. My portfolio included 36 individual stocks, 3 EFTs, and 2 cryptocurrency investments. I intentionally constructed this diversified portfolio to balance risk exposure while maintaining access to growth opportunities across multiple sectors. Because I am naturally a risk averse investor, diversification helped reduce the impact of volatility on my overall portfolio performance. EFTs provided additional stability, while cryptocurrency added higher risk but higher growth exposure. This combination allowed me to maintain balance between traditional investment and emerging financial assets. Diversification was especially important during the geopolitical uncertainty caused by the conflict involving Iran, which influenced oil prices and investors' expectations globally. The company I selected for deeper analysis was Amazon. Amazon was founded in 1994 by Jeff Bezos as an online bookstore and has since evolved into one of the most influential multinational technology companies in the world. Amazon is one of the world's largest technology companies and operates across several industries, including e-commerce, cloud computing through ASW, which is Amazon Web Service, artificial intelligence, logistics infrastructure, digital advertising, and subscription services. Amazon Web Service is particularly important because it generates a large portion of Amazon's operating profit and provides stable recurring revenue. Financial indicators supporting my investment decision include strong long-term revenue growth, high market capitalization, and a price-to-earning ratio reflecting strong investor confidence in future expansion. Even during the war with Iran, Amazon remained relatively stable because of its diversified business model and leadership in cloud computing and AI infrastructure. I selected Amazon because it combined strong long-term growth potential with diversification across multiple industries. Unlike companies that depend on a single revenue stream, Amazon generates income from multiple sources. Overall, my portfolio ended with an approximate loss of 13,000. The primary contributor to this loss was market volatility caused by the conflict involving Iran, which influenced oil prices and investors' expectations across multiple sectors. However, the simulation strengthened my understanding of diversification strategies, sector rotation, macroeconomic risk, and the relationship between global event and financial markets. Although the final results included a loss, the experience significantly improved my confidence in making informed investment decisions and responding strategically to changing market conditions. In conclusion, the simulation provided a valuable real-world insight into portfolio management and demonstrated how global geopolitical events directly influence investment performance. Thank you. This is the end of my presentation, and I hope you enjoyed it, and I hope it was also informative.